Hello, hello, and welcome to April 22nd, Alpha T 42%. We now have a new leader on the block, and that is AT&T. And let's go look at that chart. There it is, 42% for AT&T. So what happened to KR? Well, we'll get to that very shortly. They're still in positive territory, but not holding the high number that we had hoped for. It did close when a real strange movement here happened. What caused this, I do not know, but uh, it is less than 60 days. So let me go ahead and this. Oh, I didn't want to do that. I wanted to do this. Here we go. It is less than 60 days. So most of our trades are out within the first 30 days. Make either ROI 100 or the third close ratio. But when it slows down, it has slow acceleration, slow movement, then it lingers along. So we are in what they call less than 60 days out. We are less than 60 days. Expiration is June, right there. 18 June, this option will expire. So we are now gone to dipper low. And the same thing with the RCL, which is in negative territory. So we have a dipper low right in, it's very tiny, but right here. So now we had this movement today. If we can get another dipper low here, we'll get the low up in here, and then we'll be chasing this trade down to dipper low. All right, so that said, let's go on to KR. And that KR was the thing that it got hammered remember, we waited such a long time to get this third ratio. Finally got that third ratio closed, and we got our lower lows here. Now we had this drop. Now the next thing will be is if we can get a higher low on the right side here tomorrow, then we'll be able to go. Our lower low will go here, and this expiration is in July, so we still have some good time here. Remember, as long as it's over 60 days, we will not initiate the extra, the dipper high or hipper high or lower, or dipper low or dipper high to get out of a trade when it has more than 60 days to the option. So that now takes us to CVS. CVS is at 27%. Let's go on now to CVS. And there we are on CVS. Third ratio is here. There's the third ratios right there. We have to draw it out longer. Out. This is an August expiration. So right there is our August expiration. And so as soon as we're able to close that third ratio, we will just go to the last dipper low to be able to look toward the exit. So explanation of dipper low, it's a higher low on the left, lower low in the center, and a higher low to the right. That is your dipper low. So right here we have this here, but this does not initiate unless it closes above that third ratio, or it's less than 60 days from the DTE, date to expiration, which is right here, August. So we're still waiting for this close above the third ratio. Okay, that takes us now to ATV. Now ATVI is really good because of the reason it is a put. Yes, we have a put here, and the reason for the put is because the scanner came up. So our third ratio is right here at $89, and this is a put, so we want that down direction. There's our stop up here at 98.08, and so we'll be waiting to see about getting it down into that, get below that third ratio there to get that to initiate the dipper high. Now this would be a dipper high. Low on the left, high on the center, low to the right. That's your dip. That's your hipper high. Hipper high. This is your dipper low. So buy the dip. If you were doing penny stock trading, day traders, this is a day traders. One of the day traders' strategies, buying the dip. Comes down, forms this, boom, get in next day, or the high of the candle, or the high of the body. So that is today's lesson, understanding what is a dipper low and hipper high. And there also it's a trading strategy in itself. In other words, right here would be a good one right here. So let's move this back here. So here is here's a hipper high right here. You say, okay, I got a hipper high, and price crosses that high again. going for the call, and then the stop would be the dipper low. There's a low, the dipper low here, and then I think it's a dipper low, and maybe I'm not, no dipper low here, and then it would get stopped out right there. That would have been a dipper high, hipper high trade strategy. So, another way of doing it too is you have the higher low, lower low, higher low. At the third candle, you enter in the high of the candle at the top of the body, or just buy it blindly on the open. And then the stop would be the next dipper low right there, and stopped out right here. So those are the trading strategies we call the hipper high and the dipper low. Buying the dip, buy the high. All right, so those are another strategy. We have not tested that strategy here at Losers Become Winners. There's only just one account for testing, so it has to wait its turn. That said, let's go on now to Capri. Capri is now holding at. It's now holding at. It's now holding here. Now holding in at 11%. So we broke out, got up, come down, tested the upper region of our one ratio, and moved back up again. So again, we got to close at 57.95 to initiate the dipper hipper low, or RI 100 for last bar low. And this expiration is in August. So the expiration days are very important to keep an eye on if you have a stock that gets into a plateau, it doesn't go anywhere. There are some exceptional rules to exiting. There's one trader that I'm listening to on the book is called Unknown Market Wizards, and one of his trading rules was that you enter the trade, and if it didn't make a new high in 5 days, it would be out. So here would be the new high. 1, 2, 3, 4, 5. There's five. There's 5 days right there. He would be looking to getting the out right here, and because he doesn't want to stay in there and get that time decay on the option. All right, that comes down to our last positive, and that's AIU, and that is a mining, that is gold. And this one here, this is our gold, and its ratios at 1719, 1799, 1713s are closed. So we are, excuse me, 86 cents out of closing above the third ratio, and it's a 17, and it's almost only 18 cents. So that still has a few days to work out and get on. All right. With that said, in closing, let's go ahead and do the numbers because it was exciting. It was I don't know what the market did, but we did have a drop in our number. But where are we in the numbers? There's 6754 minus our 5533 bench start. We're still 1221 good in the trade against our benchmark of January 1st year to date, and we are 22.06 or 21% ahead. Let's see where SPY is. SPY is 11.6. So we are, the stochastic strategy alpha account is still beating the SPY. And with that, we'll close out today's report with the losers become winners with alphas for the AT&T company at 42%. And with that, thank you very much for stopping by and checking it out.